Hi, everybody. This is Gary dealing with Sentiment Timing, and this is our free video report for Thursday, July 20th, 2017. So, yes, I'm putting out three in a row because, like I said, next week we should be pretty much in the weeds. So, I'm not sure how many videos I'm going to be getting out in the next few weeks. So, I figured I'd kind of get it all in this week. But anyway, market finished pretty nothing today, but even though it did nothing, it actually gave us a lot of information. So let's recap a few things. First of all, we go off of time, sentiment, and technicals. The time is when, that's the, say, strong and weak periods that Woody uses with his technical timing indicators. Sentiment is why, because the herd mentality, we're only going to see major tops and bottoms when we're at sentiment extremes. And tops and bottoms are two different animals. Tops, they're around it, so you're going to get a series of extreme bullish readings before things roll over, but they go down a lot faster than they go up. But once we start getting extreme bullish, bearish readings, those are V bottoms. So it's very important to know what the herd is thinking, when the reversals are supposed to be taking place, and where they're going to take place, meaning the technicals, support, resistance, other divergences, and stuff like that. So we're in the golden halo time period. Again, that's it's been in place for a long time, and it doesn't mean we, like I've been saying, it doesn't mean that the we had a drop, and that's when the, a lot of the emails that we got and saying we're wrong. It's not, because the golden halo is this. This is when you start getting a series of extreme bullish readings. That is what the golden halo is. Everybody's bullish on the market. The news is bullish. The tape continues higher. It doesn't go down. But what happens is everybody gets sucked in right before the kill zone. And from there, you get very, very fast drops. So that is the period that we're in. So we've never been calling for a top until this, the July, August time period is when we were looking for the weakness. So we're here now. And that's, pretty much what's been going on. So this is from the morning notes that I put out today, is that the futures are showing a clear five waves up with sell signals. The cash looks like it's in a fifth of a three, so which suggests down and then up. So the conversation I had with Woody yesterday, he was saying that the July tops are a lot different than the May and June tops, because when we get a July top, the drop actually happens a lot faster than anybody is expecting. The May and June tops are, you get a lot of bouncing around, but when you make a top in July, typically what happens is pretty much what we're seeing. Everybody's on one side of the ship, and from there, something happens, and nobody understands why they were bullish as the markets, are dropping every single day. So that's it was pretty interesting that I said. So in the morning notes, I'd mentioned the reverse symmetrical triangle topping pattern, and it looks like 2470, 75, 2477 is the top of the reverse symmetrical triangle, and that should hold down upside. And remember that the gap omen is suggesting that we could see a low that comes into the 2460 and would make even more sense down to the 2450. So for anybody that doesn't know the gap omen, what that is basically when the S&P gaps to new all-time highs. It's been a failure 100% of the time, meaning that gap has been closed every single time. And you can see this is going all the way back to 2015. We had 1, 2, 3, 4, 5, 6. We have actually on 8 right now, and this is the ninth that's in play. So it's 100% so far, and I don't really see any reason to doubt this pattern until it tells us it's wrong. But this is what the gap omen is. So what I had suggested when I told people that I'm going to take a quick short position between the 2475 and 2477 and hold a little bit, and if it gets up to the 2480, add some there. And really what I'm looking for is just a quick trade down to the 2460, 2450 area. So again, we know the big picture is that we're expecting weakness to hit any time. But right now, the pattern that I'm watching is just for a quick trade. And if it ends up being wrong to quick trade and we continue down, then I'll just look to reload the short position. But it's that's what I talk about a lot. Where our newsletter and our service isn't just about a big picture and just bearish opportunities. Because with every bearish opportunity comes a bullish opportunity. But if you don't know when the low is, what is going to happen is you're going to do what everybody else does, that in the herd mentality, and that is when we start capitulating and panicking, they're selling as the institutions are buying, and as they're buying, what happens is everybody doesn't believe it's going to go up, and then they continue to short. Then what happens is they finally sense that the market's not going down, then everybody jumps in, and this is when your institutions start selling. So again, they're doing their buying and they're selling in the meat part, and you get your retail that's buying at the euphoria and selling at the capitulation. So that's really where we are right now. As you can see, everybody's bullish on this market, and I can tell you the institutions are not, they're not in the buy mode, and I'll show you that right now. So here you can see, this was today when the S&P was up some, and institutions were selling the rally. So we had the gap open. We knew institutions are selling. We have very high sentiment. So this is all, is this a bottom? Do you want to be buying this, or do you want to be looking to short it? And being that we have we know we have sentiment that's on our side. We know we have the timing on our side. We know that institutions are selling every big drop on this. I mean, every big rally. So we're on the same side. Now it's just a patience game, and you build positions. And like Woody has been saying, that these golden halo. The last time he saw it drag out like this, in a big way, was back in that 2000 and I think 14. But also he's given resemblance of the 1987 crash. And if you remember, everybody was, nobody saw why the market was going to go down here, and it lost 37% in 3 weeks. Now, again, we're not saying that is going to happen, but the fact that we're in a similar type environment that we were, where this was in July 24th, 2014. You saw the bullish, everybody was bullish, and from there we had the drop. 2015, this is very similar to what we have now. We had a drop in this, and then we had a massive drop in August, and that's pretty much what we're looking for right here: drop, then and then down. So that is a very, very similar situation that we're in, and that's why I'm really only looking to be shorting rallies right now. So this is that reverse symmetrical triangle. Really, the gap omen is looking for a pullback to come down to this 2460. Like I said, it would make more sense down to the 2450. If it comes back up, just keep an eye on this 2480. But like I said, we are in patterns. We're in a time period that you have to be really careful. We know when to expect a low, and most likely the retail is going to be selling at that low, and there's probably going to be a decent bounce off of that, because if the actual wave structure is correct, this would just be your wave 4 down, and we're going to go wave 5 up. But if you remember, the bigger drop is coming in August, so everybody that buys this one is going to get crushed, because the next one will be a larger wave 4 to the downside. So you really have to keep an eye on sentiment. Like I said, Woody is the pioneer of sentiment. He's been keeping track of this for 40 years. We have to know when these time periods are coming, and like I said, it's on borrowed time right now, but it's more important to know when the low is going to be coming, so you're not shorting or selling your long positions right at the low, and then knowing when the next high is coming, because that next high could lead to a very, very, very fast, large drop. And again, I'm not saying it's going to happen, but Woody did compare it to the 1987 crash, and this is really what we're looking at as far as possibilities, and it would actually fit a profile, because this would just be a wave 4 down, but shedding 700 points off the S&P, people would not know what's going on and be calling it a new bear market, when in actuality it would just be setting up a larger move to the upside. So again, I'm leaving the same amount of subscribers for the special that we have. This is going to be probably the last one for if we don't start the marketing next week, I'll try to get one out. If not, you're going to be on your own probably when we're going to be looking for some type of low, and everybody's going to be shorting this market. So take advantage of the special, know what's going on. It's going to be some important times, and it's going to be scary times for some people, but the ones that position their portfolio correctly, it could be one of the more lucrative times in your trading career. So with that, until the next video, have a great night.